say it's the end of April. We're here. I want to give you guys just a quick update, couple of things that I've noticed. All right. One of them being the economy. Okay. I want to talk about the economy a little very quickly. We know that interest rates are going to rise. Okay. The Fed Chairman Jay Powell said he was going to increase the Fed rate to another 0.5% pretty much in the next month or so. So interest rates again are going up. Now we're getting to above 2019 levels when we talk about kind of the rates that are going on right now. So definitely going to change the real estate landscape. Definitely going to change the picture in terms of investments and underwriting and things like that. But another thing that came out as good news, that which I don't really see it as that great of a news, that might tend to lean towards some downsides in the economy overall. I don't know if you caught this the other day, but Visa stocks jumped when they reported that expenditures were up 17% um, year over year. Okay, so first quarter had an increase in 17% of spending on Visa. Okay, so what does that mean? I mean, like that means that people are taking on more debt, right? I mean, we know incomes aren't rising, and if people had a whole bunch of cash in the bank left over from the pandemic, maybe they would use cash. But now we're seeing increases in credit card debt. Okay, so yes, people are spending, but inflation is rising, interest rates are rising, and people are increasing their debt. So those are not recipes for success, obviously, especially if you are the seller of a home thinking somebody's going to be able to pay more for your home when the average person is increasing their debt right now. Not a great deal. Okay. So because of that, really savvy investors are realizing that in some of these multifamily investment properties, okay, the rent stabilized ones that weren't super successful or really catchy or attractive are now picking up steam because it's reliable income. All right. And if you're worried about the stock market or recession, stock market crash, you want to move your money into real assets like real estate. Rent stabilized assets are definitely a good way to go. There are definitely some newer build properties like in New York. They're built with 421A tax abatements, J51 tax abatements. Um, these these are good. I mean, it's almost guaranteed cash flow. Okay, definitely check them out. If you're interested in some of those, you have questions about the tax abatements, hit me up, hit the like button. All right. I definitely want to get your opinion and let you know what's going on with all of those things. All right. So, yeah, leave comments. Let me know what's going on. Again, my take on it right now, more debt plus inflation, not looking good. I would want to be sitting on cash, or I'd want to be sitting on stabilized income assets going forward. Okay. But, talk to your financial professional or your accountant. What do I know? All right. Another thing that's been really, really interesting to kind of watch, single family home pricing. Okay. With interest rates rising, demand is going to drop out because not everybody could qualify for the same properties. Um, let's, this is just the Bronx. I'm just pulling up the Bronx as a reference. Excuse me. Let's take a look at the single family home sales, just all the single family home sales in the Bronx from a year ago to 6 months ago. All right. So basically last spring and summer. Let's pull this up, this statistic over here. So what you have is the average single family home in the Bronx, just the average home listed for $637,000 and sold for $627,000. That was the average sale price to listing price. Pretty good. Okay, 2 years before that, it was about 500. So 20% gains overall in that market. When you go to the last 6 months, so from today to the previous 6 months, the average single family home listed for 643. Okay, you expect an increase in the market. The average sale price though was still only 629. All right, a bigger gap. Just because homes were listed higher, homeowners that waited to get into the game waited too long, and they were not able to sell for increased prices. Okay, and then what you have right now, the average single family house right now in the Bronx is listed at $797,000. Okay, almost 10% above or more the last housing. All right, now I find that to be somewhat ridiculous. Okay, the people that are listing single family homes now, if your agent's telling you, yeah, we're gonna get this, you're not gonna get 10 or 15% more than what somebody got on the same block last year. It's just not realistic. The appreciation in home values has pretty much stopped. Okay. All right. When you think about um, the single family home sales, again, 6 months ago, they sold for 628,000 a year ago. 6 months ago, they sold for 620,000. All right. If you think you're getting 742,000 for the exact same house this year when the economy's worse, people have left money and interest rates are rising, I don't know who's giving your information, but you may need to adjust or just take a bet or, take some of these offers, get into a deal. If someone wants your house, go in there and buy it. Okay. So I'm sorry that's not fantastic news for everybody who waited this long to try to sell their house. You can still do it. It's not going to get better for homeowners trying to capitalize on their income in the coming months. So get what you can now or prepare to hold for 5 to 10 more years until the markets kind of swings around back up. All right. So thanks again for tuning in and taking a look. If you have any questions, hit me up, hit the like button, subscribe. Let me know what I could do for you. Okay, leave it in the comments.